Before diving into the names,
Sure.
broadly speaking, there was some disappointment that Trump didn't come out with a Bitcoin strategic reserve and so on and so forth. But what do you think is the more important thing that's happening here as crypto, to me, it feels like goes completely mainstream, if not becoming a lobby with which politicians are trying to curry interest? If that alone should put the Coinbase price target at risk, don't you think? I mean, at some point, it seems like it's all being fully integrated into the financial system.
Yeah, exactly. But our view on Coinbase is still negative. Look, if it's hard to fight the Coinbase bear thesis when Bitcoin is going up, although it's interesting today it's going down despite all the huffing and puffing.
Absolutely.
And Trump changing his mind and, flip-flopping from thin air to, the best thing ever. I don't know where Bitcoin goes, but what I know is that Coinbase is basically only 20-something% of revenue for Coinbase comes from Bitcoin. The rest of the stuff, it's not really working as well. And eventually you're going to get take rates coming down. So if you really like Bitcoin, you should bet on Bitcoin and not Bitcoin minus take rates coming down.
Or now, I mean, there's been a lot of talk about the successful launch of these ETFs, which have gathered a ton of assets. What does that tell you?
Look, it's definitely going mainstream, and I'm actually surprised to seeing, I'm sort of the camp of the old Trump.
The pure, yeah.
or just in general, I like productive assets, and to me, this is not a productive asset. But again, I'm not a Bitcoin strategist. I don't know where it's going, but it's definitely, there's a lot of people who like it. I think there's some FOMO involved here, but either way, Coinbase makes a lot less money on the ETFs than they make on spot, right? They make a lot of money on spot. Couple percentage points. They make a very thin margin on ETFs. So if ETFs get big, revenues are actually going to become less dramatically high.
There are still a few competitive platforms. Obviously, many of them have had their share of legal challenges and otherwise. But I'm curious if you think there are any kind of the big name platforms that could ever compete with Coinbase or take some of that trading share away from institutional players. Yeah,
I think so. I think eventually you're going to get a lot more, they're the only public way, and I meet with a lot of institutional investors. One of the reasons Coinbase has done so well is because if you're an institutional investor today, you almost have to offer your clients
absolutely
equity exposure to crypto, and Coinbase is the go-to. And I give them a lot of credit for that. But eventually, they're actually losing share. Right? I mean, they're losing share to Robinhood. I mean, we've tracked it in the past. They're actually losing share in July. Their percent of global, crypto volumes in their categories is actually down in July versus the last few months. So I think eventually you're going to have another public crypto exchange, and then all of a sudden you have 2 choices or 3 choices or 4 choices, and then what's the scare? There's a lot of scarcity in Bitcoin. We can debate that. There's no scarcity in an exchange trading Bitcoin.
Quick final word on this, because I just want your thoughts on fintech before we go. But what are the investing implications, if any, if Trump or another politician were to step up and say Bitcoin strategic reserve, or even if they were to say, okay, we swap out Gary Gensler at the SEC. I mean, which one to you has more kind of investable implications?
I actually think that the Trump thing actually hurts crypto and hurts Bitcoin, because now you're adding political risk to Coinbase. Like, what happens if
Larry Lindsey, by the way, had a very similar take on this.
Yeah. What happens if Kamala wins? So do we take a 50% haircut to whatever, the prices are today? I don't know. But I would rather have Coinbase and Bitcoin disassociated from political debate.
There are many who say, look, this would be a short-term gain, but once it's in the reserve, you can play a lot of games and a lot of politics, as we see with oil and so on and so forth. In fintech, we've talked a little bit about, okay, we're kind of waiting for if there is a ticky time bomb and buy now, pay later, but that keeps not happening. And the CEOs of those companies have come on and time and again say they're battle tested. They're a superior alternative to credit cards. Don't look there for the first cracks with the consumer. Where would you be looking, if anywhere, in that coverage space for issues?
Yeah, I think actually the opposite. There's no better time in investing in buy now, pay later than now.
Than right now.
Yeah.
Really?
I mean, where would you want to be when interest rates are coming down? A firm has already proven to you that they're earning a lot of money and they can actually be profitable. Imagine what would happen to a firm when interest rates come down and the cost of borrowing decline. They're going to go to the moon. Because of the way that they make money, or because of how consumers use the platform? Because the way that they make money. And think about Apple. Like 2 years ago, we sat here and the stock was down 20% on Apple Pay getting into, buy now, pay later. Now Apple is capitulating and they're giving all these volumes. That's like $10 to $15 billion of volume, we estimate, to a firm. Why would they do that? It's just hard, or? Because they realize that it's so much harder to underwrite properly. And, Max and a firm, they've mastered underwriting. And I think people didn't appreciate that, but now they do.
And so even when people say that our first segment, we were talking about some gathering headwinds for the consumer, McDonald's and in the Valley, even in that kind of climate, you have no qualms about recommending a firm and in fact saying it's a great time to own that stock or maybe others in the buy now, pay later space?
Yeah, because I think that people actually like borrowing on a short-term basis and borrowing sort of as you go instead of carrying massive credit card debt. And that's where a firm plays, and that's where they're gaining share.
Still like SoFi? Where are we on that one?
Yeah, I love SoFi. Same thesis. We've done work that shows that they can unleash 30% growth in personal loans this year if they wanted to. If delinquencies come down, and that's what we think is happening, and interest rates come down, they're going to do it.